Greetings, this is Jeff Scott, and welcome to this week's High Growth Stock Top-Down Review with the HGSI doc. Let's get into slideshow mode. Let's go ahead and start. So, jokingly, we all know this is going to stop. I mean, not joking, all kidding aside, we all know it's going to stop. But I'm beginning to feel like Buzz Lightyear from Toy Story with the To Infinity and Beyond. There's certainly a lot of bearish sentiment on TV of people calling for the big crashes. Just look at your inbox. And now I'm starting to hear people talking about Dow 40,000. So I think the bulls are still in control. We're clearly at a period of the year where, things happen. September is not always the best month in the market. In fact, it's usually the worst month. So one of these days, we're going to end this crazy rally. The question is when, and I don't think I can tell you any more exact than anybody else, except just to look at what the charts are telling us. So let's do that today. Disclaimer, this is for educational purposes only. Anything we recommend are in the spirit of education, not investment advice. I'm a doctor, not a broker, and I am not affiliated with any software vendor. I use multiple things daily. I use them on this program. I do have people that I'm very I'm not awed of their knowledge, but I am impressed with that I follow and I've learned from, as you'll see in the next slide. I've seen this slide before, so have you, but whether it's Woodward and Brown, whether it's O'Neill and his disciples, whether it's John Person, Elder, George Lee, here are a number of the books that I find value. If you haven't seen this before and you want to take notes, stop it, but I'm not going to spend, I'd like this to be more of a quicker one today and not in-depth teaching, more of my view of the market. Lots of programs. I hide them purposely so I don't have to talk about them, but I use TradeStation and Thinkorswim. I think Genesis is the best real-time platform out there. The ability for some of the scanning that you can do intraday on a real-time basis beats the other two guys handedly. Plus, with Genesis, if you need something done, you don't have to pay anybody. You call them up and say, hey, I'm Jeff Scott. I'm one of your users. Can you make me code for this? You just tell them what you want, and they do it in like 2 days. It's amazing. I use HGSI for my post-market analysis. Big fan of EdgeRater. Seasonality, Magenta Trader, and Best Choice are my old standbys. I think EdgeRater may be replacing them from just a quick and dirty, and then MarketSmith. Where are we? I always put this slide up. I always tell you that we're keep living in this red circle. Well, we're living in the red circle again. I mean, maybe we're over here and we're about to go where my arrow is on the left side of green, and we're going to keep going. We keep rolling over and going up, 3 to 5% corrections, rolling over and going up. Right now we're still going up. We're in dire need of a correction, I believe, whatever that means, to be needing to be hurt and pain. But we continue to go up. So we're somewhere in this topping area. And as John Person likes to say, topping is not a pattern as much as a process or a quick thing, short-term pattern as like a bottom could be. And that we're in a process, and I believe we are in a topping process that may go on higher. So the Canaries are now up and flying, and you can see they are basically at, I think they broke through the double top, but essentially they're at all-time highs. That has to bode well short-term for the market, especially if you're in the Canaries, which are listed here. One of the strengths of HGSI is we can make our own custom indexes and use them as indicators of the market rolling over. And you could see the Canaries peaked in March. And, the market had some rough times there. There was clearly rotation out of the Canaries, but they're back. In the March meeting and all HGSI meetings and PV and meetings that I do, we pick leaders of the market at the current time, and then we track the performance of those market leaders. And again, we look for a rollover as an indication of trouble in the market. We had our rollover back at the end of July, and now the LLURs are at a new closing high. So what was leading in March are still performing. How about the ones we chose at the Florida Summit? You can see them listed here. One would expect this one to be performing the best since it's the most recently picked. And again, no evidence of a rollover in sight. The weekly bond has gone red. We're probably getting a little extended off the 50, but my goodness, we had a pocket pivot on it for whatever that means on a fake index on Friday, and we continue to hit new highs. So far, I don't see anything to be crying and worrying about. Market themes, same story as last. Bull market, market methodically moving higher despite continued geopolitical worries. Obviously, Russia and Ukraine heated up last week. It had very little impact on the bull. ISIS starting to lose battles. That's got to be good for everybody. And talk about coalitions forming in the Middle East that actually include Israel. Israel and Hamas are quiet, but of course, and mind you, I'm Jewish, so if I have a slant and probably pro-Israel. Israel announced that they're going to take 1,000 acres, I think, in Gaza and build settlements, and that's the kind of thing that I get nervous about, as I'd like to see peace there, and I think both sides perhaps, but I get it. I understand why it's done, and I'm an apolitical person, but my only comment, not that it's good or bad, because I think it's a complicated issue, but I think it potentially adds more stress to the market. No surprises in Jackson Hole. That was a week ago, which is good. Summer rallies in place. And if you think about what keeps a rising market, rising earnings, subdued inflation, and low and not rising interest rates, that's what we have. So is it likely that we get a major market correction, crash, without one of those three things? Well, I think the rising earnings could be concerning. The weekend information out of the EU and China were, I think we saw some weakness. I know inflation, my toys get more expensive, but I'm told there is no inflation. So I think at least right now the government reports inflation is benign. And low and rising interest rates, we're not going to see those for a year. The bear case, big guys are coming back from the Hamptons. We'll see more volume. September is not a good month. We had a really great August, however. What is the impact of stronger U.S. recovery versus EU and others? I think that means rising dollar. I haven't traded in a rising dollar market in a long time. I have seen some markets where the dollar and the S&P go up in tandem, but most of the time a rising dollar pressures U.S. stocks, especially those that try to sell goods ex-U.S. Rising dollar could be bad on gold and oil, which might be also good on the economy. But if we're tightening and the rest of the world is raising rates, we won't expect the dollar to go higher. Second year presidential cycle, it's almost over. Midterm elections, if we start to see a move towards the Republicans in both houses of Congress, that might stimulate the market, although I've been told by many that most big market moves occur to the upside under Democrats. And as we all know, we're overdue a larger correction. Again, trade the market you get, not the one you think you should have. Still biased to the long side, short leash. I'm not sure we're at resistance anymore. We broke through, but we're not far away from resistance. And big bio still attractive. Banks and financial. I saw more regional banks that look good this weekend. REITs, MLPs, and utilities were back. Technology, look at AVGO, AVGO, if you want to see what technology is doing. Transports, trains, Greenbrier, Trinity, all of them still look good. And on my review, there's lots of Chinese stocks that look great. VIPS, Beta, they've been major leaders. And seasonality would suggest that China remains strong, but they had, I think, a soft PMI number this weekend, so that may or may not affect things. Future meetings. Again, if you're attending John Person's seminar October 12th and 13th and would like a HGSI one-day refresher, let me know. Right now, I'm limiting that to people that are attending the October meeting. If you have interest in coming for one day, if you're in the Southeast and want to come, email me at hgsidoc@gmail.com. Let me be very clear. I will be serving the HGSI Kool-Aid in that one-day meeting. You'll get a couple of cups. But if you really want the HGSI Kool-Aid and you want to go where it's manufactured and you get pictures, go to the PV meeting October 20th to 22nd. I will do things that are probably similar and some things that are a little bit different, but you get the whole story in PV. So by no means think of my meeting on October 11th and then my participation in John Person's meeting on the 12th and 13th as a substitute or replacement. Think of it as an added dose, but you really need to go to PV. George Lee has his meeting October 3rd through 5th, and then George and I will be doing a February 2015 meeting in Singer Island. If you have interest in this, it will be the first weekend in February. Actually, let me take a quick look at my calendar. Okay. For those lovers among you that were pissed that I did the last meeting over Valentine's Day because you weren't with your special person, the meeting will be held, looks like the 7th, 8th, and 9th, which would be Saturday, Sunday, and Monday of February. Those that want to go to the New York Traders Expo will be the following week. And I've had some discussions with George about locations and topics. It will be sort of a combination of what we did in New York and in Florida this year. Seasonality, as I mentioned, EdgeRater is now my go-to tool from a high-level perspective. From a scanning and calendar making, Magenta and Best Choice still are useful. If I look out at some of the major sectors, using some ETFs to get an idea of what's going on in the market, and I look at 2-week, 1 month, 2 months, or 3-month performance using EdgeRater run on this weekend's data, there's no 8-to-1 major every year it's up performers. And so I don't have a lot of conviction about seasonality over the next month. But if I look at what has historically led more than 50% of the time, gold, retail, biotech, Euro stocks, pharma, China, regional banks, interesting, based upon my analysis earlier. Sometimes they work better, and sometimes if you look at stocks, you can see some clear things that make sense. So I'll show you some of that in a little bit. Week ahead, the big data is probably going to be payrolls on Friday. On Thursday, we'll have the ADP employment change, initial claims, continuing claims. Short week, but still some important information there. We are clearly near the end of earnings seasons, and you can see just a few here. If one of yours is there, it's a big deal, whether it's Finisar, whether it's Cons. But you need to know when your earnings per share dates are. And now on to the charts. Just wanted to make a quick mention on TradeStation. I've talked several times about my EPS indicator, which is not my indicator. It's an indicator that's placed on the board by a guy named the Guru. What a name. And the Guru's, you can see Cons one day along, and then Pan West, and that's a popular one, or Palo Alto rather, networks is in a week. He fixed his indicator, and so if you download it from the TradeStation forum, you can get your indicator working again. I was happy to see that. I thought it was me. We'll come back to TradeStation. End of week review. As I mentioned, what a great week earlier. I'll show you how great of a week. These are the major indexes. You could see the only index that was down at all was transportation. It was down less than 1%. Volatility was up, which is never good, but volatility ended the week, the VIX at 12. Gold, silver, and dollar were all up for the week, but you could see only modestly so. The S&P 500 was in the middle of the pack here, up 0.75. HGSI is mostly smaller, or many smaller stocks, was up 1.21, which was up better than the NASDAQ. So your benchmark might be to see how you compare to some of those indexes. If I go down here, I see the S&P was up 0.75, the IBD 50 was up 0.78, the HGSI 100 was up 0.87, and my unfiltered buy watch list. These are stocks that include things that are waiting for signals and bottom fishes. They too were up about the same as the HGS 100 at 0.86. What sort of surprised me was my stocks were up over 2.6. Now I know why. I had a big position Intermune and it got bought out. Some of the big winners for the week, high beta stocks are still in vogue. My beta stock list, which I generate weekly of about 80 stocks, was up 4%. Stocks in an uptrending pullback with Kahuna, one of my favorite searches, 80% up 8.9.1%. Bible gap up stocks, interesting, the Bible gap up stocks from Friday, actually half of them were down for the week, but the performance was up over 10%. Kind of curious of what my uptrend pullback stocks, the big winners were. Catalyst Pharmaceuticals, so cheap stock up 36%. Mobile Iron, I know MOBL was talked about on a lot of boards, was up 23%. Mallinckrodt, which is the new Questcor owner, was up 11.72%. Hindenburg's, no turbulence seen short term. You got to get your new lows above 0.2 or above 2% before it matters, and we're no close to that. Bucketology, we are at a high percentage of stocks above the midline in the S&P 1500, but we're not overheated. This is very bullish in my mind without clear-cut evidence that it's time to roll over. When we start to see 15, 20, 30% of stocks above the Bollinger Bands, I get nervous. We're not there. I look at my Woody indicators. So it starts here in October 2013. Green on the percent B times bandwidth is a buy signal. Red is a sell. Yellow is a neutral. This is chop. Chop is no fun. And you look to be into prolonged periods of buys or sells. Those are times you make money. We are in a nice, strong buy signal zone. That could change in a heartbeat, but I've been making money the last couple of weeks. I hope you've been making money. And a lot of, we're on a buy here as far as the Woody indicator goes. Now, I'm not going to spend a whole lot of time, but one of the nice things about EdgeRater is I can run all kinds of signals. Now, you're probably thinking to yourself appropriately, but Jeff, I can do all of those with HGSI. And you're right, and I do with HGSI. Why do I keep EdgeRater around? Because I could, for example, pull up George Lee daily and run his signals, just like I did in that spreadsheet. Okay, I can do that in HGSI, so what's the big deal? Because of this button right here. Almost looks like a maple leaf. As long as you update end of day and you're up to date, if you hit that button, even with 3,000 stocks in the directory, you will update in about 60 seconds the last bar of the current day and be able to run signals during the market hours. So wouldn't it be nice at 3:30 to get an idea of which stocks are breaking out? You could do the same thing within the HGSI of the Morales and Catchers. So one of the main reasons why I keep both programs up and running is my ability intraday to generate signals. So you can generate George Lee's, which are breakouts and breakdowns from a squeeze, various types during the day, weekly. Morales and Catcher, code blue, finding the stocks that meet a lot of their criteria. Code blue or code red for shorts. You can do those intraday as well. One of the things that I've been working on, which is not commercially available yet, are trying to take a lot of John Person's work and work with John. And we will only release this if John blesses it and works with us on it, which is to be determined, to build his. The key thing here is you can build almost anybody's techniques into EdgeRater to develop signals. I like to have their consent, but most of this is math. Now, I mentioned seasonality in EdgeRater. I took my trading list. So this is probably 3,300 or so of stocks. It's about 3,000. These are, I put 12 years of data in, and I want to know a month out from today, are there any winners? Are there anybody that's up 10 out of 12 years? Well, it turns out all these stocks here and more are up 10 out of 12 years over the next month. Well, isn't September supposed to be a bad period of time? Well, the index and the markets are made up of stocks. The index may be up or down. Stocks may be up or down. They don't all move the same way. And when I start to see 11 out of 12 years, Medivation is up an average of 17%. And by the way, that was one of my charts that I liked this weekend and last weekend and the weekend before that. I pay attention. Amazon up 11 out of 12 years, 8%. Fluke, Acorn, 21%. That seems to be ridiculous, but up 10 out of 12 years, an average performance over the next month of 21%. You notice anything about these stocks? Medivation, OraSure, Endologics, Perrigo, Acorn, Pharmacyclics, Allscripts. These are all healthcare. Seattle Genetics. These are all healthcare stocks. Celgene up 10 out of 12 years, an average of 5%. My goodness. So I guess the point of this is not just to spend all day on this sheet, but there are some seasonality occurrences that do occur in the market. Now, John tells me, and we have nice discussions on a weekly basis, sometimes daily basis, that biotech usually peaks in mid-September. And that probably makes sense because as you go further out, your percentage of wins is smaller. So this might be a short-term pop, but there's a lot of things here that I'd be looking at based upon seasonality. Now, the benefit of Magenta would be I could have put in stocks between $250 and $100, trading at least 200,000 shares a day that are up 10 out of 10 years or 10 out of 12 years, and I could generate that risk during the day anytime. And it might be more inclusive than mine because mine's only limited to the stocks that I've listed on the left-hand side. All right. And then from major ETFs, are there any stories here? And we looked at this already, gold, retail, biotech. But none of us are these 10 to 1, 12 to 2. And maybe I shouldn't expect that kind of performance for 1 month in an ETF, which is really a basket of different players. All right. Into TradeStation, get an idea of my Elder indicators. And remember, Elder has a thing called the impulse. He paints the bars blue, green, or red. Blue is sort of your dealer's choice. You can do whatever you want to do. Red means you can sell or hold, but you shouldn't be buying. And green, you can buy or hold, but you shouldn't be selling. My understanding is he doesn't use them as a signal to buy or sell, but if he is interested in going long or going short, Elder will use his impulse indicator as a filter to see if he's allowed to go in that direction. I think very highly of Alex, as I do of everybody on this list. And here's Alex and Carrie. I was at their traders camp this year, traders reunion. 3 great books. I highly recommend you read them or look at them at least. Spiketrade.com is their website. The color of this indicator are calculated based upon 2 things. The relationship of price to an exponential moving average. When it's above, it's green. When it's below, it's red. And then the direction of the MACD histogram, if it's going up, it's green. If it's going down, it's red. So 2 greens, you get a green. 2 reds, you get a red. If price is one way and MACD is the other way, you get a blue. So you could see on the, let's go into the major indexes. Look at the NASDAQ. We see that we're blue, green, and green. So the buying window can be opening. You're okay to hold. Probably, since your daily is blue, you could even consider the other way. Although with the strong greens on the weekly, I probably would not be looking to short this market at the open on Monday. Who knows what happens in the world. These red dots are MACD divergence. And when you start to see these dots, you'll usually get a pullback. So we're getting stretched here. You can see the weekly's got the dots and has had them. The problem with these dots is most of your pullbacks occur after the dots. But you can go a lot of dots before you get a pullback. Let's look at the Dow. Same thing, blue, green, and green. No, I wouldn't say anything different there. Let's look at the Russell. Blue, green, and blue. Everything's up in the upper half. You can see the MACDs are dropping in intensity. And then if I look at the S&P 500, blue, green, and green. So I make most of my money, and so do you, probably at extremes. This is where you make money on the long side. It's a lot tougher up here because this is part of that topping process. And I don't expect to see this type of a move for the bulls when I'm sitting up here. Now, my personal account felt like we were in a, what's the word I'm looking for? Melt up the last 3 weeks, where I've had more positive return in 3 weeks than probably ever in this market. Of course, I had intercept when it went up over 100 points, and I got the intermune position. This isn't looking like a melt up yet, and you could see another vertical bump up here very quickly in a melt up situation, and that might be how this market ends. But I do point out and remind folks that we are going into a seasonably weak period of this market. Although no one says this market has to be weak. Now, a lot of people ask me, why is it that I like Genesis? So I like Genesis, and I'm just going to show this for 1 second, or never it's 1 second, and then I'm going to get off, because I can do so much in Genesis. Now, I have to tighten down my screen for my videos, or this would be 12 gigabytes for you to download and for me to upload. One of the things that I'm able to do is I'm able to build watch lists. And I'm able to, within these watch lists, build scans that I can do during the market on the current bar all day long and help me find things that make sense. I can have a quote board that has the various futures I like to follow and some of the stocks I like to follow. And what I find is really cool, it's giving me the last candle or the daily candlestick. So it gives, so if I want to find hammers, dojis, I can just scan through my watch list. I just love the way that I'm able to present that. And then I think I showed this last week, so I'm just going to show it to you again. You notice that this is the last price. Let's see what I wanted to do here. That this is the last price bar right there, which would be 829. You notice how on each of the charts I get the same notation. You notice that to the right of this price bar is this tan line. That tan line is seasonality as is calculated by Trade Navigator. It gives me the ability to look at any of the stocks that I might be following. So we said Celgene seasonality might be okay. Let's see if this correlates in this. I haven't looked at it already, which is probably stupid. You should probably look at things before you talk about them, but I'm just going to pull it up here. And you can see, here's Celgene, and look at that seasonality. That is positive seasonality. If I put up something like the dollar, what do I see about dollar seasonality? Well, dollar seasonality is supposed to be going down. That would be good news for the market, all right? How about Halliburton? Oil Services is taking it on the chin a little bit of late. So I can basically come in here and see, I expect the seasonality still against it. So what I've got here is this is a weekly chart, this is a daily chart, and these are using Person's pivots and his buy-sell indicators. It has seasonality, on-balance volume, and regular volume. This is a more standard chart. That's a daily chart, and this is a 15-minute chart. And I have force and elders indicators and other things there as well. And I just like the fact that I can put seasonality on the chart. I like the fact that I could see what my candles look like intraday. I like the fact that I can be scanning. And though you can do much of this with other platforms, I don't think anybody does it as well. Plus the fact that the customer service is so awesome. The negative side is I pay for that program. I don't pay for TradeStation. I don't pay for Thinkorswim. I get them free with my trading account. I trade a lot, so when I don't get them free either when you look at your commission costs. Let's take a look at HGSI and get a sense of what's going on in this market. Go down to Woodward and Brown user groups. Make sure you have the last ones downloaded. They get updated, were updated recently. And let's go on a top-down analysis. So this is looking back 3 weeks, heavily influencing the last couple of days. And where has the strength been? Small caps, mid caps, NASDAQ, NYSE. No wonder I've been making money. You probably noticed oil has had a good week. Look at Diamondback and all the other small players. Small oil stocks looked really good, as did service stocks on my review. Gold, silver on the bottom. Volatility, even though it was up a little bit for the week, is at the bottom over the last 3 weeks. Excuse me. If you look at 5-day performance, volatility was up. Oil was up 2.3%. That was a pretty big move. Utilities, despite the fact I made a lot of money the last week, utilities were up there 1.6%. The only losing group, as we saw earlier, was transports. On Friday, the leaders were oil, gas, commodities, utilities, none of the things that should make you feel like great for rah-rah stocks, but the rah-rah stocks were up as well, the Russell 2000, NASDAQ, etc. So we see where the weakness is, gold, silver, and even though the dollar was up, it was weak comparatively. Let's take a look at some indexes on charts. Here's the S&P 500. And let's get it to a view that we actually use. Sorry about that. I'm always playing around trying to develop new things. So nowhere is good, near as good as Ron and Ian at doing that. All right. Is that the one I want to use? Let's see. All right. So let's take off. I'm just doing this quick to see if there's any Phoenixes or Eurekas. There were not. There's a mobile breakout on the S&P. I don't even know what that would mean. So let's go into a simple chart and let's take a look. We broke through resistance. We're above the 8-day exponential average. The S&P looks great as long as it stays above that 8-day exponential moving average. And certainly as long as it stays above the 17, you should be bullish this market. You look at a weekly, and here's where sometimes I think we're better off if we just turn all this chatter off. This is a weekly chart from 2009. I have some employees / friends that I told to buy QLDs in TNAs, and they're still holding them from 2009. They probably made a better return than everybody I know that's a swing trader. Now, you don't always get these profound runs in a market. You've had to deal with some pretty substantial pullbacks, but we are in a uber bull market. We continue with it with only modest pullbacks. We haven't broken through the 200-day moving average on the S&P 500 since November of 2012, which was our last sizable pullback. Yes, we are overdue. But my gosh, what a strong looking market. The S&P continues to do well, and I continue to be long on watch. I got the 17 crossing over the 50, all very bullish signs until the market decides to give it up. NASDAQ, can't say a whole lot differently. Deeper pullbacks, never hasn't dropped below in months its 200-day moving average either. Hard not for me to be bullish on these. Again, I'm closing above the 8-day exponential. Drop down, take a look at the Dow Jones Industrial Average. Deep pullback to the 200. What a buy opportunity. A buy opportunity. A buy opportunity. So, the nice thing about these pullbacks is they hurt on the way down. But as long as you got some dry powder, you can explode back up in your portfolio by buying these on their bounces. So the tough thing here is we got nowhere to bounce to. We're bullish. We continue to trudge higher. To me, it's in bull mode, kind of at prior highs, so that might be concerning. Can it get through that double top? We'll see. But certainly very bullish. But I like these pullbacks as opportunities to get in and make money to the long side. Russell 2000. Obviously a lot junkier looking chart than the others. And this might be the place to be concerned. you know, kind of looks to me here like, call it my stuff. Are we in just a giant trading range here? I don't know. But obviously the Russell has much deeper pullbacks, has penetrated their 200-day moving average, much more common. Maybe we are in a trading range here, sort of a wide, loose trading range from 1075 to 1220 or so. Who knows? But that's what it looks like to me. Let's bring this back in. We are above the 8-day exponential. To me, that's bullish. The 17 just crossed above the 200. I'd like to see it cross the 50. If the small stocks join the party and take out their prior highs, that might be the melt up period of time that I talked about earlier. But right now, I know where I've got my stops. Probably don't want to see the market trade below the 50. Certainly don't want to see it trade below the 200 here. But right now we're above the 8 and we're firing. What's not working? Let's look at volatility. Volatility runs up. We make money when it comes down. As long as we stay below the 50, volatility is happy. Below the 200, volatility is happy. When it starts to break above and hold above the 200, your portfolios will suffer. Right now, volatility is quiet. Gold. Hope you're not a big gold bug. You might just say, why not, Jeffrey? I'm at the 200. I had a doji. Maybe it's time to run. Seasonality is strong. That might work. Unfortunately, gold has just been in a funk. And it's sort of oscillating around this confluence or squeeze of indicators. Let's go into my regular chart and see. Probably is squeezing. Yeah, it's out of the squeeze. But you can see gold is just languishing here, right on its 200-day moving average. Silver below the 200. And then oil had a big move this week. It's going to have to crack through its 200-day moving average. Was support multiple times. Now it could become resistance. So I don't see anything on the indexes that tells me I need to run for the hills if I'm a long guy. And as I said, my bias is still to the long with a short leash. We've got about 200 industry groups. Let me get to, not sure why I'm not seeing them all. Let's see what happens when I do this. Huh. All right. Something is not right. I'm supposed to have 200 industry groups. So what usually that means is I've got a filter on. So let me just play with this for a second. Well, that's definitely strange. So George, if you're watching that, maybe you can help me understand why I seem to have lost a lot of my industry groups. Well, that's going to make this kind of strange, but I'm just going to show you what I do anyways, and I think we'll be okay. Why do I not have... I'm going to stop the recording, and I'm going to reload the Woodward and Brown groups. That's probably... All right, I'm back. I just updated my groups, and I still have 104 industry groups. So I checked my other computers, and they also have 104 industry groups. Well, it was 200 last week, so perhaps there's been a change in the program. I'm looking at, my guess is the update, that the last update that I did had issues, and that it'll be fixed the next time I run an update. But let's just run through what we see because I see a lot of the same things. 2-day force up, and you could see of the 104, about half of them are positive. Major industries is just a group of groups. So let's look at semiconductor devices. I mentioned Avago. Looks extremely strong. Let's go into, had a Bible gap up on Friday. So just for those who haven't been here before, yes, this is a messy chart. Let me show you how I get to that chart. I start with a chart that has in magenta an 8-day exponential called by Ricky Wayne and Steve Bigelow, the T line, the trigger line. Green is a 17, blue is a 50, and red is a 200 simple day moving average. I like uptrends. I want stocks above their 200, pulling back to their 50, and then showing momentum. And this is a stock that I was in since it broke above the 50. You can see the earnings per share growth I like to see up here, and revenue growth on this line. And this is sort of looking out the last 8 and the next 2 quarters. I like to see a straight line. Down here I had regular volume, and the problem with regular volume is there isn't a lot of volume in the stock, and then this here you can see is really high. So I could go into my chart and say, let's make sure I have a limiter on that volume. I'm going to clip volume spikes because this will make this one smaller and make the others appear larger and easier to see. So it didn't do much. This was just a massive volume spike. Okay. Now, the next thing I like to look at are indicators of changes. So I've got the MOBOs, breakouts, and breakdowns in red from a squeeze in yellow. I have my PSAR in red as a stop, as a sell. PSR buy signal in the green dots can be my stop. And I add those to the chart. Now, I also like pocket pivots and kahunas. So I can go to my next chart, and blue are pocket pivots, magenta are pocket pivots down. These are kahunas, which are big moves in the Bollinger Bands. Deep black blue are bigger than the light blue. Deep red are bigger than the light red down. This line here is the group index. I know what the group is doing. And then I added Bible gap ups right here in this green dot. Up top, I have my technicals, my bongos, my accumulation distribution, and my force index. I put all this together, and I call it my nuclear scan, which includes my technicals, bongos, accumulation distribution, and force. High jump bar, which I'm not going to go into today. I talked about it before. It's a measurement of extension. My Bible gap ups, my squeeze, my mobile breakouts, my pocket pivots, my kahunas, and then I've been using a lot of unbalanced volume as I've been studying the work of John Person. So this is one of the leaders of the market right now. Big uptrend, Bible gap up on Friday. If you're a fan of Morales and Catcher, you might want to read the book, and you might want to manage the trade based upon that. It closed in the upper third. What a great day. You had evidence with a pocket pivot the day before. You had on-balance volume lifting off. I think there were a lot of signals. You had a mobile breakout the day before. AVGO clearly a leader. RF micro devices in the process of buying TriQuint Semiconductor. Mobile breakout from a squeeze, a pocket pivot, and a kahuna. It's been in a long uptrend. It's clearly extended in the highest of the high jump, but a lot of buy signals in RF micro that might have been in sympathy to Avago. NXP Semiconductors coming out of a quarter of a cup, not much of a handle, but broke out on Friday. Multiple pocket pivots, big volume. It too makes decent money. Here's Intel. It's going sideways, less impressive. So I guess the point is top-down investing, semiconductor devices look strong, as does Skyworks, which I didn't get to. Oil exploration, these are back. And I saw a lot of small ones on my review that I was impressed with. A couple of big ones to start. Let's just go through the top couple. Marathon Oil. As oil has come up, these guys have broke up above their 50 and a nice move here. Everything is green. On-balance volume is positive. had a pocket pivot on Friday. Looks very bullish, has earnings coming in later on in the year, 2% dividend. This is clearly a big stock. APC, one of the best of the pure play energy stocks. Look at the earnings per share growth here. Has been basing since June. Mobile breakout looks good on Friday. You might want to wait and see if it can break above this area, but a breakout there, it goes on to new highs. Diamondback is one that I'm in, and everybody that talks about the stock like it because of its FANG, but look at the earnings per share growth for an oil stock here. Look at how the revenue has gone up 5 times here. Pull back with everything else. The junior oils really got clobbered. Has been in an uptrend for, 10 days. Broke above the 50 on a pocket pivot, mostly green above, and nowhere close yet to the prior highs and not extended. I like FANG. It's one of my holdings. Concho looks just like FANG on a chart. Continental breaking out already to new highs. This is a very strong group. Southwestern, not yet above the 50. Number 2 ranked, and I liked a lot of the small stocks that I saw this weekend. Consumer electronics, I have no idea what DGLY does. I guess they do stuff electronics for the motion picture, but what a breakout story here. This is a stock that this is going back to 10. Huge breakout here. Look at monthly. I have a feeling it used to be an expensive stock. Yeah, it once was a $77 stock before the market crashed in 2008 and 2009. On a monthly stock, a monthly chart, it's made a big move. Do your own research. It's had a big move from 6 to 18 in 10 days. Kind of a risky play here. GoPro breaking out from its IPO trading range. So they're leading the way of consumer electronics. Right click back. Next group to look at would be infrastructure software. Splunk, FireEye, these all had some analyst upgrades over the past week. And these are stocks that have been beaten up. But look at the move here above the 50 with the kahuna. Everything turning green on Splunk. Still doesn't make money, so it's a story stock, momentum stock. If it breaks above the 200, does it continue to go? You got about 10 points to the 200. Do you play it now or do you wait? FireEye, similar story, not quite as an interesting looking chart, but you can see the volume coming in, OBV changed to positive. What else? Palo Alto Networks, one that gets a lot of play on the website. I get a great buy signal on Thursday, pulling back to the 50. Closing with the doji upper side of the bar, opened above it, in a squeeze, had a kahuna. I think Palo Alto looks interesting right here. I do have a position in Palo Alto. Back. Biotech. We saw that they look strong on the seasonality. United Therapeutics, this is up on patent information, where it held up its patent versus somebody else. I think Sanofi, although I don't know for sure, and they bolted higher. So this is a news play. I don't like to run after news. Intermune is one that I need to sell, but it's moving up towards its takeout price, being bought by, I believe, Roche. Techmira is an Ebola play. It's been kind of volatile, but maybe this is where it breaks out from. I saw a number of analyst upgrades. Look at how strong on-balance volume is and rising despite the stock coming down. I would call that I used to call that a divergence. John Person would call that a convergence, but I think that's a buy signal here. I think the rising on-balance volume and the falling price tells me that there's more interest coming into this stock, and this might be a natural place to jump into the stock. It's speculative. It's tied to an Ebola drug, which is very, 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 very early. They don't make money, and it's kind of like Intercept, volatile story stock. Amgen, all-time highs, lots of pocket pivots, on-balance volume leading it up, everything green, that looks pretty strong. Gilead had one bad day, made it up over the next couple of days, trading at all-time highs. You see OBV has been positive since the middle of July. Great earnings per share growth, and you can guess that I have a position there since I've been talking about it for so long. I mentioned Medivation as a strong seasonal stock right now. You might want to test it in magenta and make sure. But look how this stock has broken out. Everything is green. Awesome earnings per share growth. They're expecting sometime soon a label extension on their lead product, and that is probably what's driving the stock. A label extension means more patient population, which if you're a biotech stock is a very bullish thing. I continue to go down and look at the top 10 lists. Again, I'm a little bit confused why I've dropped off so many of my groups, but I think it had to do with the last update, and I'm sure that will be fixed. Telecommunication, or there was a change in the group structure. That's possible. Telecommunication stocks. This is a Brazil stock. I don't know if I want to touch Brazil, but maybe it's time to get into Brazil when it looks so bad. Way below its 2,000-day moving average or 200 weekly moving average. Why would you want to buy this stock? Well, it broke out here, had a couple of kahunas, positive on balance volume leading the way, a viable gap up, and it pays a 3.5% dividend, VIV. I'm not recommending it, highly speculative. Less speculative and similar patterns would be Verizon, coming off its 50 with a kahuna here. It pays a 4.3% dividend. And AT&T, again, similar pattern coming off the 50, and it pays a 5.3% dividend. You might want to park your money over the next month in these stocks because A, they pay a dividend, and B, they're likely to hold up better perhaps if the market sells off because of those dividends. The first one, very speculative. T-Mobile, also interesting. There's a lot of discussion about potential takeovers. Communication equipment, let's look at ANET. But Apple continues to power above 100. My guess is it runs up until it has its new products, and then we'll all be disappointed and it sells off. But you could see at all-time highs, pocket pivots every day, on-balance volume pushing up. It did have a red candle high on Friday, which could be maybe concerning. I don't think so. Everything else is green. What I don't love about Apple is its rather tepid earnings per share growth, but it also trades at a modest PE of only 16 and does pay a small dividend. One that was running this week that caught a lot of attention was ANET. Clearly it had some big moves with a pocket pivot on Friday, OBV breaking above. I don't trade stocks that are this short in time around, but it had an interesting move. It's run up from a 55 to 87 since June 6th. That's had a pretty big move in 2 months. So I'm getting a little tired. This is basically what I do is I go through the top 10 list up and down. Let's look at integrated oils. And Petrobras, one I bought last Monday, I should have bought it a couple weeks ago. I was able to buy some leaps with minimal extrinsic value in them, which sort of surprised me. Talk about Brazil. I mean, this is a Brazilian oil company. It's been around for a long time. You could see in 08, it got up in the 70 or 80 range. This was driven because they found a bunch of oil reserves, but they were going to take a decade or longer because they were in deep water to get to. Something's happening here. And whether it's China, which has gotten very close with Brazil, but you could see that ever since April breaking above the 200, support, and then it just took off, closed at a multi-year high, getting close to $20. That's Petrobras. Here's Petrobras, Argentina. I guess this is the Argentina division, similar looking chart. There's a lot of issues with Petrobras. If they're going to tap that oil reserve, it's going to cost money, which means debt. And you also have a government in Brazil that sets what they can charge, which limits some of their pricing power. Hess, interesting buy point on Hess in a squeeze here. mobile breakout from this level might be very interesting. So, and then last but not least, and in my list, it wasn't in the top 10, precious metals. Hard to believe this with gold being weak as it is, but we are seeing some movement in some of the leading gold miners. And you can see Newmont had a PSAR reversal out of a squeeze, a breakout the day before. Everything is green. One of the better looking charts in precious metals. On that note, let's see if there's anything to the downside. I don't understand why my number of charts is so small of industries. And like I said, I think there was an update issue. We'll see if it's fixed later. Endeavor Steel, one of the steel stocks to the downside. So on that note, let's just take a look at a couple of other things that I did. I did my group inclusion report. I'm not going to run it again because I'm concerned that the last download may have had an issue. So let's go user groups. Here was my group inclusion filter. Let's go to, say, all stocks. So let's very quickly go through some of the other top stocks that I saw in my review, and then we'll say, have a happy Labor Day, enjoy your picnic. PEIX, renewable energy, lower left, upper right, moving strong. Someday this stock is going to stop going up. No evidence in that chart that that day is today. It was a stock that was $3 earlier this year, or in late last year, and now it's 23. That alone is a little bit concerning. FNHC, sideways channel here, trying to break out. Not that impressed. I didn't like this chart. Don't know what they do. I think they hold collateral insurance underwriters. High Crush Partners, so whether it's Silk, High Crush, or EMES, the fracking sand providers, all have great looking charts. A little bit of a pullback. It's running again. Maybe it's time to get into High Crush. Here's Silica, a little bit even cleaner chart, starting to get into a bit of a melt up. And I say that because the trajectory is increasing. RF Micro Devices, looked at this earlier. They're buying Triquint Semiconductor, up some in sympathy to Avgo. Great earnings per share growth, one of my favorites, been my favorite for months. Acorn, strong seasonality. If I look back on that seasonality list, 11 in the next 1 month, up an average of 21%, 10 out of 12 years. I don't expect it to move 21%, but clearly in a bull run, everything looks green. Ambarella, networking stock, I believe, semiconductor stock, my bad. So same group as RFMD and others. Pull back to the 200, running again. Skyworks, I mentioned earlier, lower left, upper right, same as RFMD, beautiful stock. Clearly, semiconductor is a leading entity. Triquint to be purchased by RFMD. Monolithic Power, another semiconductor stock. So you don't believe there's strength in semiconductors. I do. TAL Education, a Chinese internet education stock. This is the kind of chart I love to buy. It's just hard to buy a lot of a stock that's $140 a share. Pays a 2% dividend, long uptrend, trade sideways. All the moving averages come together, and I get a kahuna, a pocket pivot off of free parking, which is the 50. This is the kind of stock I love to buy. I'd rather see it be a $14 stock, not $140. Jazz Pharmaceuticals pulled back to the 50, to the 200, broke above the 50 here on another run. Gilead, we looked at, one of my favorites. Salix, I've talked about this for several months. There's a lot of acquisitions talk now with Salix, so it's now in play. Not fully priced on what's offered, but close. Gentherm was one we used to love. It pulled back to the 50. They make air-conditioned seats. A lot of new cars have them. Great earnings per share growth, continuing a strong uptrend. Here's Avgo, I already saw that. YY, Chinese internet flash retailer. No, not flash retailer. This is in the real estate. Online platform in China. It's been a big leader. Got great earnings per share growth. Doesn't look that great right here. I'd like to see it take out perhaps its most recent highs before I get more interested in long and YY. Internet security, VDSI, or online or technology security. Nice looking candle there. Mobile breakout from the squeeze with the kahuna, positive on balance volume. Industry group going up, just don't like its earnings per share growth. Cavium, another technology play in the, guess what, semiconductor device story. I think it's a broken record, the strength in semiconductors. Whiting Petroleum, another one of these smaller, lower left, upper rights, breaking out to new highs. All green, great earnings per share growth. Trinity, I mentioned them in Greenbrier. There's also make a rail car. They do refurbishing and building new trains, among other things, because to carry the oil. Lower left, upper right. Greenbrier, like Trinity. Team Holding is a healthcare roll-up, I believe, health supply services. Breaking out here, mobile record from squeeze and a kahuna. Bit Auto, China online auto advertising retailer. A little bit of pullback after a major run, perhaps setting up again. And on that note, I'm going to have to say goodbye. Let me just show you one of my favorites and why I do have a portfolio that includes long-term holds that I buy stock and sell puts around, as well as a short-term portfolio, and take a weekly look at United Rentals. And this is a kind of stock that I like to be long in, long, tight pattern on a weekly, lower left, from upper right, run from 24 to 120 since 2010. On that note, just put up my buy list so you can see the stocks that I'm looking at and interested in this week, many of which you've already seen, some of which are breaking out, some of which are for plays on dividends. And I'm going to stop this, and you have a great week. Talk to you next week.